The S&P and the NASDAQ are up 9 in the past 10 trading sessions. Yesterday, Fed Chair Powell helped juice stocks with these comments on potential rate cuts.
We've been very clear that you wouldn't wait for inflation to get all the way down to 2%. Our test has been for the past quite some time that we wanted to have greater confidence that inflation was moving sustainably down toward our 2% target. And what increases that confidence in that is more good inflation data. And lately here, we have been getting some of that.
Join us now to talk markets and earnings, what it all means. Lori Calvasina, RBC Capital Markets, head of U.S. Equity Strategy. We've all, as you point out, been waiting for the rotation trade, which it had a couple of false starts. But it looks like it's starting again. And you think that might overshadow what is too much complacency and a possible pullback.
Right. I think at this point in time, right, we've seen all these efforts for the market to kind of get away from this big mega cap growth, right, AI-driven leadership, back to financials, back to energy, back to small caps. And we've had a couple of blockbuster days in the small caps, and I think that's deserved on the CPI print that we had. I mean, if you look at positioning on the CFTC data, we've been around SVB lows in terms of Russell 2000 positioning. I do think, though, that this reporting season is a big test, and we really need to see this sort of value small cap trade assert itself on the earnings side for investors to really be comfortable, kind of sustaining that rotation beyond just a trade on a couple days.
But do you think the CPI, which is it's good for everybody else, but it could mean pricing pressures for some of these companies?
Yeah, we actually have one chart that we've looked at over the years where we look at company commentary about pricing power, and if you match it up against CPI trends year over year, it's pretty much the same chart. So we kind of come into this saying, okay, we had that soft CPI print, we're all excited. That's good for stock multiples, right? If you have lower inflation, you get the idea that interest rates are coming down, that gooses your multiple. But what does it do to the revenue side? We found about a 98% correlation between S&P revenues and CPI as well. So there are puts and takes. We're going to have to work through some of that, I think, in the coming weeks.
But the inevitable, what you saw is maybe a bit of softness in the stock market. If the Fed is now cutting, then that may take that off the table. We may not have a pullback then.
Right. And, I think we talk a lot about conflicting cross currents. So one of the things, I would say two things that argue for a pullback right now. Number one, seasonality. The last 5 years, August, September, October, we often have some bad months. It doesn't necessarily derail the year, but it does, sort of serve as a pothole, so to speak. If you look at sentiment on the AAII survey, net bulls were at 27% last week. One standard deviation above the long-term average is about 22%. And we're not quite there on the 4-week average yet. We're about 20%. But when you get to that one standard deviation mark, typically you've got a bit of a pothole over the next 3 months. Now, if we look at the Fed cuts, I mean, what's really interesting, the last 4 cutting cycles, you tend to run up ahead of the cuts in the market, and then you tend to see a bit of a sell-off after the cuts. And so, I think we've had so much enthusiasm that's emerged. It's kind of reinforced the idea that maybe we'll get a pothole after we kind of get past those cuts, but maybe it pushes it off a little bit and sentiment can stay elevated for a while.
It always seems like we make some type of low in October, and it's happened again. Not like horrifically scary lows, which, October has a lot of days that start with black for some reason, like Black Monday, black, whatever. But even recently, the last couple of years, the lows were in October, and it could all set itself up for something like that. But we see no indication of a pullback yet, really.
Not yet. And, we had a little bit it's kind of a baby pothole that we had back in April, about a 5.5% drawdown.
What would this one be? What do we need to shake things out? Do we need 10% plus?
I think we need worse than 5, but probably no worse than 10. If you get a 10% or more pullback, that's typically associated with recession fears starting to percolate. I don't think we're anywhere near that. I think this is just a digestion period we need to see.
Okay, very good. Lot to digest.